For more, we're joined by Scott Gecas from Longleaf Trading Group, live from Chicago. Scott, great to have you on board with us this morning. Thank you so much for joining us. Now, we know the oil declining. It's snapped that 4-day rally that we've seen there. We were watching the EIA report there, those gasoline stockpiles increasing for a fourth straight week there. What did you make of the latest report from the EIA?
Well, yeah, with the report coming out, again, the stockpiles have increased, the fourth straight week, increases, the tie-up for the first time since August. I think the move to the downside might be a little bit overdone. I think that could be due to a lot of the profit taking, seeing that most of the traders, most of the open interest was, pretty much along the oil market. So any type of bearish news is going to have an extension to the downside. Right now, I think it could be a little bit overbought or oversold. I'm sorry.
I mean, there's a lot of speculation of build-up in the market. Do you think it is a good time to be selling out into these rallies and actually taking some profits off the table?
Well, I think that's what you did see today is a lot of the, the longest, taking some of the profit taking off. With the build coming into play, I think it's a little bit overdone where we're at on a technical level. I think the fundamental aspect with, trying to keep, the supplies at the criteria where, it increases, the move to the higher side is still in place. I think that there might be a floor into the bottom of the market right now, and the option market is definitely placing that in. Especially with the open interest in the option market, the volatility came in just across the board pretty much by full 2 volatility points, which is a pretty significant move for the options as well.
Look, we know there's still that conflict, Scott, happening in the Middle East there between Iraq's central government and the Kurdish forces as well, which seems to have strangled some of that crude flow to, through that pipeline there to the Turkish port. How much is this kind of having an influence on the market right now? And how do you see all of that playing out with that sort of political uncertainty?
Well, that's an odd thing because, I mean, with the uncertainty with the conflict with Iraq and the Kurds, that should increase normal volatility levels. But right now it hasn't. You're seeing it's not affecting anything. So, if that conflict is still going to in place, I would definitely think that it's going to move higher just based on the instability and knowing what's going to happen. With the unstable and the uncertainty in the oil market, that tends to lead to higher prices.
Mm-hmm. And are you expecting prices to move higher? I mean, there's a lot of talk about OPEC with an extension to those production cuts. Do you think we will get it and perhaps the oil price will continue to move up?
Right. Well, I don't necessarily think that we're going to move straight up. I think we're going to be in a consolidation period for a little while. But with OPEC keeping, 1.8 million barrels at bay, trying not to increase that, last August coming in, the supplies were about 1.71 or 171 million barrels above the 5-year average. And if they're going to try to keep that down to the 5-year average, I don't see the oil market going lower.
So what would you...
So I think that's going to be a bullish catalyst going forward.
Yeah, right. And so what sort of target are you looking at? What are some of your ranges, I guess, to the upside and the downside that you're looking at for those oil prices?
Well, definitely, I think the floor in the oil market is going to be around $50. I know it's a little ways away, but that's where a lot of the open interest is in the options. And, that's a huge, psychological level. If it have a close below 50, I think that you can see a sharp sell-off between there. But we have quite a bit of ways to get there, too. So I think it's just going to be in a sideways market until something, out of the ordinary happens.
And what about if we get a wave of US shale hitting the market once again? Because we know that obviously tends to upset the apple cart a little bit. I mean, do you think that would prompt potentially a big sell-off, maybe heading back down towards the $40 mark, perhaps?
Well, again, the fundamentals, some of the stuff that is coming in a little bit bearish, but, here in Chicago with the market, and we're seeing the open interest, still climbing to the upside. Coming into the number today, there was an abundance of long contracts. I think that's why you've seen that sharp sell-off today. But again, it's not like they're closing out the positions. They're still remaining open interest long. So until some of those technical factors, start weighing in with the bearish factors, I don't see a downside moving. I just don't see, the oil market going lower based on anything that we've seen so far.
What else are you looking at? What other commodities? I mean, gold obviously has been a big one we've been watching, but it seems like those geopolitical tensions very much have eased recently. What are you watching with the gold price right now?
Yeah, the gold market has been in the news a lot lately, especially with the volatility in the gold market being all over the place. They're pricing in, the gold market's pricing at about a 5.5% move up or down. That's a little bit high considering where we've been over the last few months. So until we get a catalyst of a clear direction, the gold's still going to stay, pretty much in line within that range where it's at now.
All right. Look, Scott, we'll leave it there. We do appreciate you joining us on the program today. Thank you so much.
Thank you.